You know, if you lose a trade in space, it doesn't count because nobody can hear your screams.
Good thing I don't lose.
Frank. We're not lost, are we?
According to the spinning thing in front of me, I have no idea.
What was that?
Sorry, I just got an EDGEFINDER alert on my Discord.
Wow, nice add-on.
I think my helmet's too tight, or maybe my head is just too big.
Oh, it looks like we've got an incoming transmission.
Remember guys, we're doing our big Black Friday sale this month. Check out the links in our bio for more information.
Roger that, Julie.
Okay, I'm starting to think we might be lost.
Maybe James could help us with directions.
I think he accidentally blasted himself out of the airlock.
Again?
Let's go get him. Man, I've been playing too much Starfield. This feels kind of real.
Maybe we should do one more lap.
I think that's a good idea.
I really don't understand why we're looking for this planet.
Frank, it's because someone told us that there's this planet out there where traders can get funded up to $200,000 in simulated trading accounts. And if you pass, you get the chance to get all your money back. It's really kind of a trader's paradise.
Traders have been searching the stars for a place like this, and it's just too good to be true.
Frank, you just gotta believe. Once you get there, they'll give you 15% off any examination with promo code A1Trading15.
Yeah, I'll believe it when I see it.
All right, Frank, take us out of hyperspace.
Coming out of hyperspace. Now. That's FX2.
That's it. That's FX2. The legends are true. It is as good as they say.
Wow, this is incredible. There's a big giant sign that's got a promo code at the front that says A1 Trading 15 for 15% off.
We finally made it to FX2. Get your discounted access to their trading accounts right now. Link and promo code down below in the description and in the chat right now.
Can you repeat all of that once again?
No.
All right. Good morning, guys. Welcome back to another live stream. Thanks for sitting through our intro there. We've got our space theme full swing as we go into the second week here of November streams. Thank you all for being here. We got 100 people hanging out as we kick off and get started here. Remember, as you saw there, as we got started, just remember we have FX2. We got 15% off going on right now. If you use the link and promo as we shared there in the video, it's in the chat right now. With that said, we're going to start out where we usually do. We're going to take a look at the dollar, which is just underneath 105 as we speak, just trading right at 105 actually. And I want to talk a little bit about where we start out this week with reference to the US dollar. Now, if you're a currency trader, index trader, gold trader, doesn't matter. The dollar chart should matter to you as it's a really big indicator of general market sentiment as well as, of course, the U.S. economy and et cetera, et cetera, et cetera. Anyways, we take a look at the dollar index here. First thing I'm looking at when it comes to price action here is we've fallen out of this range that we were stuck in for the last, I don't know, like 2 weeks, right? We were stuck in this range, just back and forth, couldn't break a high. And on the Fed meeting last week, we saw a failure for the dollar bulls to hold this gain, right? We wicked up into this area and very much saw a counterparty push to the downside. Right now, the path of least resistance, as I made clear in my Sunday video, for those of you guys who watch those, I am pretty bearish on the dollar index as we come in. All things considered, it seems like the Fed came out somewhat dovish compared to the hawkish kind of expectations that were out there. And that change in pace, to me, tells me that we could see further decline in the dollar index. So where do I think the dollar index is going? Well, let's take a look at the daily chart for a second and highlight something here that's pretty key. So you had a breakdown of this support zone. And this support zone, like I said, was really important to the bulls. So we had this really decisive candle close below this low, and that tells me, okay, likelihood for the dollar index is to continue lower. So then you have to kind of take a look at the daily chart because we've been in an uptrend. So we've been in an uptrend. We entered into a range-bound market environment, and now it looks like we may be seeing the early formations of a downtrend on the dollar index. So how do we play this? Well, again, you have to kind of look and say, all of these checkpoints that the bulls marked as victories, right? Breakouts, retests, continuations. I think the market is now going to start heading back to test those areas. So the first stop for me on the dollar index is a move down to 104.5. Okay. Now I think that this is maybe due for a little bit of a short-term bounce. Again, I've marked my fibs here. It's possible that we go back and retest the underneath side of this support zone, right? We previously held support here. We very well may go back and retest this. And now if the bears are able to hold it, we would expect that area to hold. And again, the next target for me on the dollar index would be a push down to 104.6, 104.5, somewhere in this range that we have marked in green. Okay. So again, I think we're rolling over. And again, a change in the directional pace. We had this huge upward move. We've gone sideways. And now with everything, especially one of the lead catalysts being softening Jerome Powell, the Federal Reserve, right? I think the path of least resistance is to the downside. So how do we play that? Well, here's a couple things. First of all, what am I bullish on? Okay. Let's say going into this week, what am I bullish on? S&P, what I've already been bullish on, and gold. I'm looking for gold buys. I'll show you guys that in a second. On the flip side, what am I bearish? Well, if it's not obvious already, the USD. So I am looking for short-term continuation, which again may turn into longer-term downtrend on the dollar. It's possible that we see an end of the year kind of give back on the dollar index. We've had a really strong year overall, despite, well, I should say it's been a strong year, but the first half of the year was not great for the dollar, right? 2022, we saw the apex of the dollar, and then into 2023, it kind of rolled over and continued. In the second half, the dollar index really picked up. But it does look like probably a bigger, steeper pullback at the very least. If you're a dollar bull, I still think it's probably fair to say, if you're looking at this daily chart, that it's probably due for a pullback. And guys, on the daily chart, what I want to add, this is really actually more of a weekly chart bias. That 50% retracement level seems like a very healthy, even if you are a dollar bull, 50% seems like a reasonable pullback. And we have notable support around 103. So longer term, I think, barring something changing in perhaps a strong CPI figure or hotter than expected inflation that revives the dollar bull thesis, path of least resistance to me is down to 103. So how am I going to trade that? Well, I showed you again. Let's see if I can go back. Bullish S&P, bullish gold, bearish USD. Okay. Hopefully that lays it out for you as we kick off today's show, as we get into this week's trading. Again, I am going to, generally speaking, be more on the bearish camp of the dollar. So for currency traders out there who are watching currencies, that's going to mean possibly bullish euro dollar, which it sounds like sacrilegious at this point because I've been so bearish on the euro for most of this year. Here's kind of my watch list currently. On the EDGEFINDER, we've got the Nikkei, the Aussie CAD, the Aussie Yen, German 30, NAS, and gold. So I already have an S&P 500 trade, so I'll show you guys that where we're at with it. Markets are just getting open here in the US, so let's see where we're at with the trade. Update on this. Still going very well, and I like probabilities for an end of the year rally on the stock market. Barrier to the fun party here is we are kind of currently sitting at a resistance point, so I'm a little bit cautious here. That's why I've got my stop loss trailed. For those of you guys who are following the S&P 500 with me, we have to admit, okay, yes, you've gotten this breakout. Let's talk technicals for a second. Downward trend, right? We broke out of this steep downward trend. This was my entry point. And we've ridden this up, and we've impressively been able to close outside of this downward trend, right? Love it. Filled that kind of range there up to this level of resistance is where we currently traded today, and this is where we ended out last week. So I think that, yes, I am still an S&P bull, but I've got my stop loss in place because I'm going to be cautious about this. I'm not ignorant to the idea that the stock market here, the S&P 500, could find resistance here and sell off. And if that happens, I'll trail out for a profit. But if this market is able to break out, which I think it could, that's why I'm trailing a stop, right? You have to ask yourself, why wouldn't you just take profits at this level if you think it's going to hold? Well, I don't necessarily think it's going to hold. I think we have momentum. I think we may pause here, but I think we're probably going to break that and continue. We'll see if I'm right about that. And if I'm wrong, like I said, I've got a stop loss in place to tell me that I'm wrong by taking the trade off at that point. So that's how I'm kind of cautiously going into this week with what was a wonderful move last week across the board. We saw stock indices really, really rally, which was awesome for the trade. And if you guys are inside of the Discord channel, then you know we've got some cool stuff. Let me get this pulled up so we can take a look at the indices trades. Here it is. So this is the current trades that I've got, and I put out this hang on loosely joke, which was really not funny, inside of the Discord, and I'm still holding on to this trade. We traded this last week and held it pretty much all of last week. By the way, if you guys would like access to the Discord, it is currently on super sale. We are going mega discounts right now for 45% off. If you're not already in the Discord and you'd like to get access to the notifications that are sent out by Frank and I, we share all of our trades. If you're not in the Discord, again, today's the day to join. If you've been waiting, if you've been watching the stream for a while and you're like, I'd love to join the Discord, but you know that you want a better price, there is no better price than what is available today. Here's how to do it. Click this link that's right in the chat right now. It's also in the description. If you shoot us a message, someone from our team will hook you up with that Black Friday 45% off discount. And again, that is a major discount. If you want the Edge Finder, if you want the Discord, just message us. We'll get that sorted out for you. But again, while we are live here, that is going to be 45% off of the Discord. So we'd love to have you in there. You get access to all the trade notifications from Frank and I. So let me just show you really quick what that looks like. So you got indices trades, forex trades, metals trades, stock trades from both Frank and myself. We trade gold, we trade indices, we trade currency pairs, all sorts of good stuff. And if you'd like to get notified every time we take a trade with full breakdowns and analysis, join the Discord. Now is your chance to do so for 45% off. It's a one-time fee to join, which is awesome. So you get that one-time fee to join. You don't have to pay monthly or anything like that. You just get your ticket in, and then you are in the community. So message us for that chance to get that 45% off sale. So again, we're at resistance. I'm going to stay cautious here, and if we break out higher, then great. I'll look to probably trail stops higher, but otherwise, I'm going to try and hold on very loosely to this S&P trade. I know Frank has an S&P 500 trade as well, so we'll talk to Frank about that in a second. But I also I'm very curious to see how things play out on like the euro as well, right? So for currency traders out there, we've got something really changing in the direction of the market recently. For many months. I mean, this is a daily chart, and you take a look at the daily chart today. I mean, actually, you could even drop it to the 4-hour. This resistance area has struggled to really materialize into a continuation of this downward trend, right? We did not see like breakouts of these areas. We saw still strength from the bulls, and now with the dollar kind of falling off, I think the euro could be set to move higher. And this is something that's been, on a downward trend for the last several months. So let's tighten up our resistance points here on the 4-hour. So we'll get in here and point this out. So again, big breakout of this level of resistance here. And so if we get a pullback into this area, what was resistance, I think actually could turn to support. Now, I will say in terms of the euro, for people who are trading it here today, be a little careful as we do kind of have this upper limit going on in terms of this channel that we're in. So I would say it's probably due for a little bit of a pullback, similar to the S&P 500. But if we do get that pullback, again, I think path of least resistance for euro is perhaps a continuation to the upside. Now that we're finally getting some relief push to the upside, and I know, another story for that is gold. And I've mentioned that I'm really interested in gold here. This is going to be an interesting level here or kind of range to watch this week as you've got this back and forth chatter. And the edge finder is actually creeping in a bullish signal here on gold following the labor statistics last week. We saw a really cooling labor market, which could back off the Fed. And if that Fed gets backed off, we might see the next leg higher on gold. Now, I mentioned this on my Sunday video. Geopolitics are a big thing right now, right, with gold. But what's politics? Sorry, it's hard to speak and type or write with a mouse. Geopolitics are a big thing with gold, right? So if there's escalation in the Middle East, that is, of course, going to do something with gold. By the way, also de-escalation, which I do hope we see. It would be from a humanitarian standpoint, it'd be very nice to see some negotiations and peace, and I hope that does come for all the people impacted in that parts of the world. But I think from a geopolitical, if you're just talking markets, again, geopolitics are tense right now, and that is going to be an underlying bullish thing for gold. But then the other side of it is, Frank and I we've been pretty hesitant on the gold bullish side because of that strong USD. But the US dollar problem is perhaps not so much there. I mean, you're starting to see the dollar break down and lose what was such a sharp edge to the knife. Right now, it's kind of dull. What I'm speaking of is, of course, the Fed meeting last week and the NFP jobs numbers, right? We had a little bit of juice to the bear story for the dollar. And if that dollar continues to be bearish, you could get the breakout of these highs. And this is going to be, like I said, this is all day long. That's a trade I'm looking for on the gold market. So we'll go to Frank in just a second. I'd love to ask him about this. So we're going to bring in Frank. Right before we do that, we're just going to thank our sponsors here. So we'll thank our sponsors with this quick clip, and we'll be back with Frank where we'll talk more about gold and see what he thinks. So check it out. Frank, are you really trading right now? We are literally traveling through space.
Yeah, I mean, thanks to 8cap, I can trade at any time and anywhere, even in space. And I get a free edge finder with it too.
That's pretty cool, but honestly, there are so many other brokers that I think are better.
That's it.
I'm ejecting you.
All right, Frank, let me back in. Come on. I'll sign up for 8cap, I promise.
Don't get lost in space. Trade with 8cap. If you'd like more information about how you can get a free edge finder, click the link that's in the chat or description to speak with one of our representatives and sign up with 8cap. There's some great free perks available. Check it out down below.
Frank!
Right, Frank threw me out of the ship again, and now he's here acting like it didn't just happen. Frank, what's going on? How's it going?
Doing good. How are you?
I'm good. And to join us here also too, I want to bring in Ivan. I see him in the backstage. He just joined us on the call. So we'll go ahead and bring in Ivan to be a part of this discussion here on gold. Hey, Ivan, how's it going?
Pretty good. Pretty good. Yeah.
Hey, Ivan and Frank. So I was just talking a little about gold, which has kind of gone into this range recently. But I know, of course, our audience is always wondering about gold, talking about price action here on gold. I've mentioned that, for me, it's like I've got to see a breakout one way or the other on gold. Are we going to get the break of 2005, or are we going to start seeing 1980 fall apart, which has been this stronghold for gold here recently on the downside? And like I said, 2005, every time we pump into the 2000s, it seems like gold rejects that area. So I'll go to Frank first, and then I'll come to Ivan. Frank, what do you think about gold right now, either fundamentally or technically? What are you looking at with it?
I'm looking technically, just because despite like its run up and what's going on in the Middle East, I can't bring in like my hopes for how things turn out. It's just looking directly on the chart is I guess just a wedge pattern here after a long break to the upside. So it's at a decision point. It's got to make its move. Right now, I guess it could go either way. I'm not really looking at gold to the long side or the short side. I'm just kind of seeing where it goes. But yeah, I'm not no huge opinion on gold right now.
Okay, fair enough. So it's kind of still range bound, stuck in this spot. Ivan, what do you think? Gold, bullish, bearish? What do you think?
I think that if it breaks 1970, it would be a very good thing to the downside. Yeah,
Okay.
that's kind of a thing I think about because the velocity was too high. But yeah.
Gotcha. So 1970, this thing is run really hot. So what do you think? I mean, the dollar story has sort of lost some of its key points. That's at least my take on gold right now. With the Fed softening its tone, jobs numbers coming out, and markets seeing what they wanted to see there. What do you think about
CPI next week?
Yeah, we do have CPI next week. So what do you think? I mean, we're in this range bound. Could you be bullish, or are you only looking for bearish setups? What do you think?
I'm going to go back to what I mentioned in a meeting earlier today, actually. I mentioned a meeting on euro dollar back in September. I said that euro dollar was too low to sell. This one is too high to buy. You are on the wrong end of the trend, of at least the beginning of it. And the higher it goes, the more premium you have to pay to be able to make the money that you want to make, and the risk is higher and everything. So it's kind of like it's not deadliest catch. If you try to buy it now, in my eyes, I would argue that you are forcing FOMO. And
Yeah. So you mentioned the euro there, and again, another chart I want to ask both of you guys about. The euro has been just beaten down for like several months. I agree with you there, Ivan. I think that if you're looking at the euro, whether you're a bull or you're a bear, this is one of those tough times for me, at least in terms of what do you do, right? Because if you're someone who trades the euro, if you're bullish, it's already made the move. And if you're bearish, you're kind of fighting what seems to be on the daily chart an impressive breakout. I guess if you're longer term bearish, that might be a different story, but you've had this break of structure. Again, we'll go around the room. I'll go with Frank first. Do you think the euro has more upside here?
I do. I think that because of the indices, and also, we've seen big breakouts on both ends from the euro and the S&P. So what we're seeing here is just a break in the long-term downward trend line. Euro, the same thing you've said. There's just these highs right here. Prices breaking, forming higher highs. And overall, because of what we saw last week, the Fed is just not looking as hawkish as we anticipated. And there's nothing this week that I think will change that unless Powell on Wednesday and Thursday just says something completely different, which he most likely won't. He's never really gone back and forth, and he's just always been very clear. So I think the bias is turning towards the euro against the dollar, and also turning towards the indices as well.
I think one thing to add to that before we go to Ivan on that is, part of it is I'm not necessarily advocating for like, oh, the euro just looks incredibly attractive. I think that, it's similar to the stock market. Frank, you made this point. Sentiment on the euro for currency traders has been the very, very crowded trade to be short euro USD. Maybe not so much as of recently, but for a lot of this time, it's just been the easy play in the currency world to be more bearish on the euro because of a slowing economy compared to that US dollar stronghold. So I'm not necessarily saying, oh, the euro is just rosy and rainbows. I'm saying that I think that when you get the shift back, even just a little bit, it doesn't take much to really start something to happen on the price action side. Same thing with the S&P, right? Sentiment was super bearish, and we had a couple things that hit right, and boom, there it goes. S&P 500 up several percent in a single week. So just thought that was worth mentioning in terms of euro sentiment. But Ivan, do you agree or disagree? I mean, euro, is it starting a new trend to the upside?
Chandler, if you put my chart on,
There we go.
my pivot points, monthly target, 107.50. As Aldhuff says, I took a trade on the FOMC. It was just 6 pips. I'm like, cool, I held it. So if you did hold it, you should. I don't know if you should consider. This might be the high. And the thing that I'm saying, the joker that you are actually looking for, Frank, is CPI next week. That's going to be the determining factor if it's going to go dollar bullish continuously or go back into dollar bullishness again. Because I would say that market has become, well, they have agreed apparently all of a sudden with the Fed, which I would call a bit delulu, because the CPI is still rising. It's still above 3%. So if you say we want to pause, okay, we can pause. But for how long is that CPI going to continue to rise? How long is that going to rise? And you're still going to sit there and be like, well, we are still going to pause. Because that was the sentiment how many weeks ago? It wasn't too many weeks ago. It was just before Fed. That was, we have higher inflation. We should probably rise. And it's probably a relief rally more than anything else. So I've seen the ball out has been said he has sold it. I think that's a bit early to consider selling, but I would at least want the CPI to increase next week to be able to say that go back to dollar bullishness again.
Yeah, and that's a good point. And we also had another good point in the audience just now from Dexter, who points out that the idea of the ECB cutting rates before the Fed will cap any significant gains, which I think is not necessarily wrong thinking, Dexter, because again, you look at the two central banks, they're in two kind of different, I guess, rotations. However, I still think that squeeze, that short squeeze of kind of changing sentiment could last for a little while. And as traders, lasting for a little while is all we need to potentially keep some short-term momentum to the upside for the trade. At the end of the day, if you're trading that shift back, again, to Ivan's point, monthly target idea of perhaps this is getting a little bit overbought in the short term, that's a different topic, right? Than just if you're bullish, and it doesn't necessarily mean buy it at this second, but short term, it could have a little bit more upside. I want to show you another chart here. This is our retail positioning indicator on the EDGEFINDER. And what we can see here is that in terms of the euro specifically, we're actually getting pretty mixed sentiment from retail traders. So 46 to 54. So retail traders kind of just in the middle. Some of the more extreme readings for people who do care about this stuff. Retail traders are very much long on dollar Swiss. They're very much long, well, pretty long on things like the Australian dollar, and they're shorting still the USD JPY. So for those of you guys who are interested in that, there is your update on that. And then the next thing I wanted to just go over is real quick, the COT data. So for those of you guys who watch the show for the COT data, here is kind of the latest on this. And while we're on the topic, here's the euro. We saw a slight increase in euro bullishness from institutional money. And then you take a look at the dollar, you had a slight bearish lean in terms of institutional money. Australian dollar saw a big bump. The yen saw a little bit of a bump. Gold saw a bump. And what I mean by bump is bullishness, right? Money flowing into gold from institutional money. Same thing with the NASDAQ. And on the flip side, you had a bearish kind of move in oil, the Nikkei, South African Rand, silver, Bitcoin, Swiss franc. So worth mentioning. And again, this is sort of your overall positioning on a longer term basis. You can still see the Japanese yen, the Australian dollar, the Canadian dollar on the bearish side, the US dollar, oil, and gold still on that bullish side. Now, this is their net positioning. If you guys would like access to this data for our Black Friday sale, as I mentioned earlier, it is currently 45% off. All of our market data, our software here at A1 Trading that we build is currently 45% off for Black Friday. You can shoot us a message using the link that's in the chat right now Do not miss out on that. Like I said, it is the best sale price of the entire year. Send us that direct message, chat with someone on our team. And also, by the way, if you do get access to the Discord group, you'll also get access to Ivan's coaching webinars, where he does coaching webinars throughout the week, working with members. We have several people, who are looking for that, looking for those opportunities to get into a smaller group setting, ask their questions to Frank, myself, Ivan. And if that is something that you're looking for, it is also available inside of our Discord. And just to show that, inside of the Discord, again, you get the trade alerts, but you also get access to the VIP webinars, which Ivan does a wonderful job going through and answering people's questions. So there's your plug of the day on that. So again, back to our topic here a little bit with the currency side of things, the euro, the pound, the dollar. Frank, in terms of trades or ideas for this week, is there anything that sticks out to you beyond just what we talked about so far?
Just basically risk on pairs now. Just seeing the flip in AU, GU. I keep having my S&P chart pulled up because I just wanted to talk about how there was COT data, but I guess we can go back to that. So I want to look at risk on pairs now, and depending on where price ends up today on a lot of these things, like I may be looking to buy, just because we have a whole week of this same sentiment, and I know we have inflation news and whatnot coming out next week, but there's something that I also wanted to look at was just the overall trend in things regarding inflation. So core CPI, we've seen come down substantially since 2022 and 21. Month over month, you have these like little pockets of rising CPI, but overall still lower from where we were initially. And the same thing on the year over year. What we're looking at is maybe some sticky inflation levels, but what it looks like is the trend is overall down. And I think this is what Powell is talking about when he says it depends on the data. Like, we keep rates where they are, we'll see where inflation goes. So unless we see some crazy turn of events and we're coming back above 5% or whatever, I think what he's going to do is just hold off and keep that idea open for a rate hike. But as of now, we're just looking at slower inflation. Even if it's growing or ticking up, it's very slight versus this overall downtrend. So yeah, as long as we have this and the sentiment this week, I'll be looking at risk on pairs for the long side.
Okay, fair enough. And Ivan, same question to you in terms of things we haven't talked about yet. I guess yen pairs. Do you have any thoughts on the yen pairs right now?
Was that a question about what we haven't talked about? I have a lot of things to say about what you haven't talked about yet. The one that is the new schedule for the
take it away, whatever you'd like to.
The mentorship meetings are now 7 a.m. New York time, Monday and Tuesday, because that's what people wanted apparently. So it's just before you on Monday. Happened already today. Was 18 people present, so it was pretty good meeting. Got some good feedback. The other one, it was my insurance company just sent me an email to tell you to check your fire extinguisher and your smoke alarm for the batteries to make sure that going into winter season and Christmas and everything. Other than that, I'm just looking for pullbacks on yen pairs. We are too high. It has gone too much, so I'm just waiting and chilling at lower prices.
And as Frank mentioned about risk on currencies specifically, you've got the Australian dollar, Japanese yen. For those of you guys who are not familiar with that term risk on, risk off, generally speaking, risk on is going to be related to things that are more risk exposed. Obviously, stocks fit into that category. Some of the currencies that are lesser established, like emerging markets, and then you of course have the Australian dollar, perhaps the Canadian dollar and the pound fit into that category roughly, and that's in comparison to things like the Japanese yen and the US dollar, which are these like super kind of safe haven currencies. So you have Australian dollar, Japanese yen, Ivan pulled up. In terms of yen pairs, would you be looking for more risk on focused variations of the yen crosses, or what do you think?
Yeah, so my general theory for the yen pairs is to come down. I would call it maybe a bit considerably though, but I am a bit annoyed at myself or the market or whoever it is. I don't know who I'm going to be annoyed at for going so fast up. And the quicker we go up, the quicker we come down. So I'm a bit, I'm going to say worried, but it doesn't fit my criteria that we're going to go this fast up. So I cannot buy this high. If I do that, I'm going to break all the rules in my book, and I'm going to lose money. So right now I'm just trying to protect whatever I have. So yeah, Euro yen, Aussie yen, CAD yen, pound yen, New Zealand yen. Can anyone call the Bank of Japan and do some intervention so I can get them down? That would be great. But in the meantime, I just have to wait.
Yeah, if they could just buy their currency for a little bit, get the yen pairs to come down, we get that entry, and then they can quit that stuff and let it ride back up. But
yeah,
if only it worked that easily.
Now they can do the interventions they were talking about. Now, please, now.
Right, exactly. Yeah, no. So Frank, Ivan, I want to thank both of you guys for coming on, sharing your ideas. And last week, just to mention, we had some ginormous events and streams. We will have more of that stuff coming here on the show. This, of course, is a show that we do Monday through Friday. If you're somebody who's new to these streams, then first of all, hello, welcome. Thank you for being here. Frank, Ivan, and I, we are the kind of regulars on the show. And if you'd like to stick around with us in the future, it's free to be here. Hit that subscribe button, hit that thumbs up button, and also check out Ivan's channel if you'd like more from him. The link for his channel has just been dropped in the chat for you if that's something you're interested in. And last plug, like I said, the coaching webinars happen throughout the week. So if you're already a member, make sure to tune into those. And if you're not yet a member, consider using the promo codes as well as the link that's in the chat to get access to our Discord for 45% off this month. And Chandler's got something to show us here that is worth noting. It's a cool milestone. His screen is going to pop up here in just a second. Let's see what he's got for us.
Hello, everybody.
Look at that.
I wanted to show off that, we got, you can't see my mouse. We hit $400,000. That'd be nice. Subscribers.
Yeah.
Yesterday. So that's
absolutely awesome. Yeah. Thanks for pulling that up, Chandler. Again, thank you to everybody who's in the audience here. We really appreciate you guys for sharing this passion that Frank, Ivan, myself, we all have. And of course, on the media side, our team has a passion for this stuff as well, putting this sort of content together, bringing people together. So we are very much thankful to you guys for your everyday viewership, support, and of course, thanks to everyone who makes this stuff possible. So with that said, thanks, Chandler.
All
right, guys, that's going to wrap up the show. Again, thank you to Ivan and Frank for joining me on the show here today. And with that said, Ivan, we'll catch you on the next one.
Thank you very much for having me.
All right. And see you, Frank, too. We'll catch up with you later. I know we talked a little bit of COT data. We'll probably put that out in the newsletters and telegrams for those of you guys who are there. So thanks, Frank. All right. So as I just mentioned, by the way, guys, if you would like access to the Telegram channel, that is free to join as well. Keep up to date with us throughout the week. You can use the link that's just been dropped in the chat here for you. Join our Telegram. It's totally free to do. We've got like 30-something thousand people in there, and we are sharing screenshots, trade ideas throughout the week. So if that would be something useful to you, you can also click the link that's just been dropped in the chat for you to join the free Telegram channel. I think it's coming. It'll be there in a second. Don't worry. It's coming. And I think, let me see. Did we have anything else? Let me make sure. There's the Telegram link. Do we have anything else on the radar here today? Chandler James, sorry for the lack of prep on my end, but just want to make sure we're not ending the stream preemptively if we had something else coming. Nope. Okay. All good. Thank you guys very much for tuning in to today's show. And we will see you all next time. Bye, guys.
Thanks again for flying with us on the A1 Trader. Our goal at A1 Trading is to give you the latest in market news through our daily videos and articles. Take advantage of our huge Black Friday sale, 45% off, happening all month on our best products we have to offer. A1 Trader, prepare for the return home.